Hi, welcome to Smart Investor. Today, we are going to learn a new topic on open interest. So, for Sensible has provided free access for all its features for Zerodha subscribers. So, I feel this session, how to read open interest, how to understand, how to interpret, how to predict the market, now how to take various trades and how to adjust based on the open interest and all we are going to learn. This is a very important video for traders. Please watch this complete video and also keep speed at 1.5x or above to make it more quick watch. Because this is a lengthy video with the complete details end to end. It is useful to you that. Hope this video is useful to you that. Please do subscribe and share it. Let's get into open interest masterclass. Thank you. So before conducting the session, main motto is now Sensible is free for all Zerodha users, right? So I thought this is the right time to have this open interest analysis, because earlier it was only those who are subscribed to that can see all those features. Now this is very well free for all Zerodha users, and most of the users anyway have access to Zerodha. They can learn this very well, so they understand. This is the time I have been waiting for. So when time has arrived, I thought so to have this session. First of all, what is open interest? Any of you have any clue? What is open interest? Just by word, what is open interest? So why? What does it mean? Open interest means, the word open interest, it stands like it gives meaning that there is also closed interest, right? CI is out there, but of course we don't care about CI. We generally don't talk about CI. Closed interest and open interest, which means there are contracts which are open, is called open interest. What does it mean? Let's say this is all about, actually this session is all about options. Or we talk about options. Let's say we have Nifty last session closed at 19,300, right? Yeah, close to 19,300. 19,300. Let's understand what is open interest. Let's say person A is there. We assume that person B. Let's assume for simplicity, there are only two people are in the stock market world. They want to trade. Now, person A wants to sell 19,500 call. 19,500 call he wants to sell. This is a contract. When it's a call, 19,500 is a contract. A person A wants to sell person B. Means a person A wants to sell to person B. How many lots? One lot, which means I say one lot. So A is a seller. Let's change. A is a seller. B is the buyer. So how many contracts are open? There is a one contract. One contract between A and B. Now there is one contract. So A sold one lot to B. B bought one lot. So there is one contract sold, one contract bought. Together is called one. Tomorrow, let's say A again wants to sell one, let's say two more contracts. Wants to sell two more contracts. B also, okay, you sell, I'll buy. Now B also bought 2 contracts. So person A sold 2 contracts. Person B bought them 2. Now how many contracts? 2. Totally 2. So what is total? Here let's make it total. Here total is 3 now. Tomorrow A again wants to sell 5 contracts to B. Again, yeah, fine. If both of them now total out of total contracts 1 and 3 this is so earlier 3, now he added 5, right? Now totally 8 contracts. This 8 is called open interest. Yet strike of 19,500 call. I'm telling call. 19,500 call. Open interest is 8. Again, maybe some other day, A wants to square off 2 contracts. Means buy. Means he wants to exit buy. Means again B, okay, he will sell it back. So what happens? -2, right? 2 are squared off. This is a closed. So what is again total open interest? Open interest comes to 6. Now open interest now is, earlier was 8. Now open interest is 6. That's it. This is the funda about open interest. This is about we spoke about 19,500. Similarly, let's say we can see, say let's say 19,000 put. Let's say 19,000 put. Similarly, same principle. Let's say it could be having a 10 open contracts, right? If 10 means, so what we see, 19,000 put have open interest 10 contracts, 19,500 has 6. So if you see this one, so what is that? So 19,500 has 6 contracts and 19,000 put has let's say 8 contracts. So we have a strikes like 90,500, 90,600, 800, whichever strike you go, 50s or 100s. We see number means those are the contracts between buyers and sellers. Open, not closed, not squared off. That is called open interest. Hope it is clear now. That is a simple definition of what is open interest. Now, I have one question that in this open interest, who are all the participants? We want to know that participants. Who are the participants? Anybody say, any guess? Retailers are one participant. Okay, retailers means you and I. Okay. Anybody else in this world? Stock market or other participants? Let's say institutions. Okay. Under institutions, who are there? FIIs and DIs, right? These are big institutions. Yeah. So, how many participants are there? Totally 2. Now, generally, what do you want to learn? Do you want to learn from losers? Do you want to learn it from winners? Obviously winners, right? If you see who are the winners in the stock market world, we all know there's a report from SEBI, or anybody can say simply, institutions are winners, retailers are losers. We know that. So today we focus on winners. So just we learn only from winners. Out of FIIs and DIIs, open interest is all about options, right? So when you say options, DIIs hardly enter into futures and options. So we ignore DI. Now we go about futures, right? Now, so here I'll make simple word, right? Retailers and FIIs. That's it. Two participants. Now, there are two participants. One is retailers and FIIs. So we know that retailers always lose money. FIIs are long term, makes money. So just we want to understand what FIIs are doing, or how FIIs are making money. That's it. We here to learn from FIIs. Just what FIIs activity is happening. All that we learn it from FIIs, so that will help us what we have to do that. As long as we follow FIIs, maybe we'll also start making money like FIIs do that. So one who follows retailers, they are obviously they lose money because they are losers. Okay, now so we understand who are the participants, we understand who are the retailers, means you and I. We understand institutions and FIIs. What do they do? Now let's see open interest. Where is open interest? Where do you find open interest? All of you see this NSE site? Hello?
Yes.
Fine, good. Now, where is open interest? See, this is the NSE website where you and I find it. Here Nifty, I taken Nifty. This is a Nifty, and expiry is upcoming week. Where is the open interest word? See, OI. Here see OI, put side OI and call side OI. This is the one we are focusing, we are learning. We understand, right? There is a seller, there is a buyers. Now, how do you understand this open interest? These are all sellers' point of view. Do you understand this buyer's point of view? Obviously, we know, right? We understand. We want to learn from FIIs. What FIIs generally do in options, they go for sellers. Of course, I'm not talking about hedging point of view, but normally FIIs are always sellers. So when you mark 19,400 calls sold, means I'm talking about sellers, right? 19,400 calls sold at 33 lakh and 19,300 puts sold 52 lakh by FIIs. You may ask, why sellers? Why not buyers? See, 33 lakh or 52 lakh sold means equivalent buyers also there, right? Who are buyers? Obviously, buyers are retailers. I'll tell you how. I'll tell you why this assumption is true. Let's see here. What is another next big contract? This is what is 19,000, 11 rupees. So let's see 19,000. Next highest open interest, maybe a little far, is 11 rupees. So if you take 11 rupees, right, buyer is to pay just 500 rupees. Even for 1100 this 90,000, seller has to pay around 20,000, 25,000. It goes to even a number of how many times? 10 times, 100 times. If you calculate like this, seller has to pay 10 times or 20 times, sometimes 100 times margin he has to pay. Okay. Now, even see, FIS wants to buy 19,000 at 11 rupees. Does he expect 11 becomes 100 rupees and wants to buy, wants to sell it back? No, right? Seller, buyer, if buys 19,000, 19th by next upcoming expiry. This is which expiry? We see, right? 24th August. At this expiry, FS thinks that let's buy 11 rupees with all our funds and it becomes 200 rupees. We'll buy it back. Do they think? If so, that is called gambling. That is not a trading. That is not a business. In real business, so sellers are most highest probability of winning probability, right? So who is the highest winning? So let's say buyers pay like 500 rupees, right? Buyers pay 500 rupees, seller or FIS pay 25,000 rupees. Right? So 50 times, 50x is seller is paying. So when seller is paying 50 times, does it mean he thinks it is the highest probability to win or lose? He is investing, he is putting that much margin, means to win the probability of the game. To win the game, he is the one who is paying that much amount. So FIs have highest amount. They only know all the secrets of the trading. What is the happening? What is to going to happen in future? What is the probability? And what are the events? What are the upcoming maybe any events? All the data FIs have, because FIs have all the amount. They know all the things. Just we are the retailers to mimic them, copy them, copy their trades or copy their moves, so that which will result us to win our trades also, right? So hope it is clear so far. Let me get your idea. Is it now clear so far? Who are the participants? What we learned? I'll tell you here. What did we learn? Who are the participants? We understand who are the participants, right? And seller point of view, who are the sellers, who are the buyers? Of course, open interest, highest open interest point of view, we understand what is the highest open interest and all those things. So far, is it clear now? No, we know this about open interest. We know this open interest. Does it mean, say, let's say, I'll make it a simple, 19,000. 19,000 is the highest open interest put side, right? And 19,400 call is highest open interest. Let's say this is the one highest open interest. So does it mean, my question is, does it mean that market never goes below 19,000? Does it mean market doesn't go up 19,400? Because we see 19,000 puts our highest open interest, 19,400 as the highest calls open interest. Does it mean that they know that all other things? So does it mean that, so we know, yeah, 19,000 is downside, 19,400 is the upside. Let's all sell 19,000 and 19,400 all together will make money? No, that is not as that easy. Why? What open interest? What does it indicate? Open interest indicates. Listen this carefully. Open interest indicates doesn't indicate market movement. It doesn't say market movement. Is it clear? You have to understand this. It doesn't say market movement. Means it is not going to confirm you that market moves between 19,000 and 19,400 only this upcoming expiry. It doesn't say that. But what it means, this is the participant's expectation. You have to underline this word. Open interest means expectation of the participants. Who are the participants? We learned FIs. What FIs are thinking at this point of time. At this point of time means whenever you see the open interest, highest open interest, or open interest change, it means at that point of time, those participants are considering market would be within this range. It is not a guarantee that market doesn't go beyond 90,400, 90,000 downside. No, it never gives you that guarantee. But just that is the expectation, which means expectation keeps changing time to time, which means it is very much dynamic in nature. You need to understand that. This open interest is dynamic. We have to see that. This is not a fixed. This is not a guaranteed one. So this keeps changing. But at that point of time, what is open interest telling? Based on that only we understand. So we as retailers, we look into this open interest. We understand, oh, this is what is happening. What is participants means FIs are thinking. All that we understand. That's it. That is all about that thing. Now, let us understand. Other point is what is the support and resistance. We see this, right? We see this 19,000 puts is of course no. 19,300 is the highest open interest we've seen, right? 19,300 and 19,400 is highest open interest. Let's see whether you see this one or not. I'll show you once again. This upcoming week expiry 24th August, 19,300 is what we see. Thanks for bringing that point. So let's say highest open interest you can see, and call side highest open interest also here we see 2 lakh. Is at 19,400. So these two are seen as open. So now we have seen highest volumes traded open interest. Now we have seen highest open interest contract. Where is that? So highest is 19,400. Highest put side is 19,000. Premium is 14. Now, if you see this one like this, how do you draw resistance and how do you draw a resistance and support? Though it has 19,000 as one, but we'll have to find 1.45 is there. So we have to consider for the week. This is the one highest one we have to take. 1,45,000. Let's not go 19,000. That is lower than. So 19,300 we consider. That is 19. This is premium is 40. Let's make a correction. No. So 300. 300 as 90. This has 40. Now, so let us understand. So what is the participants support and resistance? This 19,300 put as premium 90 rupees, highest open interest. So this is we call this is plus I say mine. So premium. So let's say 100 means 19,210. Let's say we can consider 200. This is 40, right? So 19,440. Just for simplicity, okay? I'm not getting into charts and all those things. Now, based on this, what is being expected from the participants? 19,200 is a lower side support. This is called support. This is called expected support. 19,440 is expected to be resistance for this expiry. Okay, is it clear now? So this is the after premium, considering the premium altogether. By this expiry, what people, highest participants are thinking that Nifty doesn't go beyond 19,200 level and doesn't go upside 19,440. So they expect Nifty spot expires between this level only. This is the support and resistance we understand from the open interest. This is all about support and resistance. Hope this is clear now, right? So now, as I told you, I repeat, right? I want all of you to remember, this open interest can change any point of time. This open interest we seen today. This is today's open interest. Tomorrow, if market sentiment change, if anything happens, then this will be also changed dynamically. That's what I just reiterated earlier. Now also I'm telling that. Okay. Now, let us understand next activity. So we know that everybody, like all of us, most of the FIS, assuming that 19,440 is highest, 19,200 is lowest. Let's say tomorrow something happens and market cross 19,440. What will happen? This is called short covering. Many of us hear this word every time, right? Market rallies. People would say, yeah, this is a short covering rally. What does it mean? So whoever short at 19,400, right? This is, we know that earlier short at 19,400. People would be thinking that they are closing 19,400 calls. They are thinking that 19,400 call, that is why market is rallied. This is a short covering. No. If that is the assumption, any of you in this call thinking that 19,400 calls are closed, that's why market is rallied. No, absolutely that is wrong. Because closing 19,400 call doesn't move market up. Why? This calls and puts are derivatives of derivative products, right? And not a actual original product. What does mean? Derived from the actual. This is derived from the spot. What is spot? Nifty spot is they cannot move Nifty by closing the calls, right? They cannot move. This is a derived products based on the spot that is derived. So what will happen? So I'll tell you what will actually happen in this case. Just understand, this is important. So As I told you, right? Does it mean that 19,400 or 19,440 doesn't cross? No, there is no guarantee. Anyway, it can cross. So when market, most of the participants believe that it doesn't cross 19,440. But when market cross with more force to 19,440, participants close this calls because calls would be in the loss. What will happen? This is called short covering. What means short covering? Not closing the call. What happens? This FIs come back. They start buying Nifty because they go long in Nifty. They go long in Nifty. What does it mean? How do they go long in Nifty? Do they buy Nifty? No, they cannot buy Nifty, right? Then obviously, alternately, what can they do? They go and buy Nifty constituents. What are the Nifty top 8 is? One, Reliance or HDFC Bank, Infosys, let's say top constituent, right? Infosys. So they come and buy these stocks individually. So they keep buying. They keep going on long of top weighted stocks. Reliance, HDFC Bank, Infosys, TCS, ICICI Bank, whatnot. These are top 5 constituents should start rallying. So they close the calls. They start buying this one. Maybe whatever way they can buy, they go on cash or they go on equity side. They go on futures buying. Maybe future contract, they go long in futures at these individual stocks because they started before. Now they started going long at this top 8 days. This is where Nifty goes higher. Why Nifty when these levels are close across, Nifty would be rallying too much because this is the principle behind that. Just not by closing the calls, just by close the calls and start buying underlying top weightage stocks. Go long so that they will get more. Just the view went wrong. So instead because of the view correction, they start doing opposite. That is how it happens. The sensible open interest, go to open interest. Yeah. If visualizing this one, right, it gives you very more knowledge. This is a intraday, leave it intraday point of view. I'll come later. See here. If you see, observe this very closely. Sensible has given very good visualization color. This is say red color, right? Wherever red means, what does it mean? Red. We all know red. Red means what? Market is bearish. Green means what? Market is bullish or market goes high. That is how they made different colors. Means red means what? Red is see here. Red is calls. Calls means number of calls sold at 19,400. We realized before, right? We just identified, right? Number of calls sold means what? Market is bearish. Right? More calls sold, less puts sold, which means what? Bearish. To finalize, to confirm this, what has happened? Let's see. See here we see here total calls sold 6.2 crore, total puts sold 4.93 crore. Which is the highest one? Calls are highest. Why? Market sentiment is bearish, right? So this is where we say market is downtrend. Market is not bullish, or market is nowhere you can see uptrend is arrested. How do you say? More calls are sold. Here we see more calls are sold. Means that's indicating red color. Green is less height, red is higher height. Now, so this is another point is now PCR. This is why I put in the subtopic PCR. What is the PCR? Put call ratio. PCR is put call ratio. What is the put call ratio? 0.8, close to 1, right? What does it mean? So number of calls put sold are mostly equal, not exactly equal, which means what does it indicate? At least this neutral to bearish. 0.8 means what? Puts, right? Number of puts. PCR means number of puts divided by number of calls. Value comes to 0.8, which means what? More calls sold than puts. Then tomorrow more puts sold than calls. The value comes to maybe 1.2. PCR comes to 1.2 or 1.5 like this. So what does it indicate? I just told you, right? What does it indicate? PCR is 1 means neutral. PCR 1 means neutral. PCR below 1 means we have to start focusing attention. PCR 0.8 is okay. PCR 0.6 is oversold, which is in everybody's just blindly selling calls. Oversold. PCR is, let's say, 0.4. Oh, it is oversold. Anytime, any positive news, it will take reversal. So 0.8, 1 means neutral. 0.8 means okay, a little bit neutral to slightly bearish. 0.6 means bearish. 0.4 means over bear trend, means it is a oversold. Too many calls per sold, it indicates 0.4. What if 1 is okay? What if 1.2, 1.4, 1.6? Yes, same thing. 1.2 means slightly neutral to bullish. 1.4 means bullish. 1.6 means ultra bullish, means number of puts sold very high than number of calls. That is where we get this value, right? Numerator and denominator ratio concept, right? So we'll get this value. 1.6 means overbought zone. Any negative news, market may tend to come back. This is about PCR. Now, if you see this one now, right? If you understand this one, PCR is now 1.8. Means this is all about like this expiry. This is neutral to slightly bearish. We can say, technically speaking, this is a neutral variant. If it is neutral, now tell us. So based on this open interest, based on this data, how do you interpret? You know all this data. You understand this very well. Unless you know what to do, it makes no sense, right? So what do you do? So if sentiment is PCR indicates market sentiment. You have to understand. Market sentiment is, you need to, one. This is what I said. Sentiment. It indicates market sentiment. What is market sentiment? Neutral. Till what time? By this upcoming expiry, 24th August. So if it is neutral, what is the best strategy to apply? Straddle. Short straddle, right? That is where we see 19,300. 19,300 as highest open interest. Means in a way, short straddle. See, almost puts sold, calls sold together. More, if we take this only this range, market spot is 19,300. No, sold, number of puts sold higher than number of calls sold. So what does it mean? Highest participants went for straddle and for short straddle. This is the trade they have taken. This is where we say resistance. Highest support downside is 19,300. Highest 19,400 we are seeing as a resistance. So this is the support. 19,300 is support. 19,400 is resistance. Now, what is next? We never say only one resistance or one support. We need to also find out what is next. What if it breaks? Next one is this one. Next one is this one. So 19,200 we also found earlier also, right? 19,200 is also another support. This is also another resistance. What is that? 19,500. This is how we interpret the open interest. This is how we have to understand. Otherwise, unless we interpret, we cannot take the trades. Unless we know that properly, we do not understand what to take, how to make adjustments, right? So now, this is what we understand. Hope this is clear now. So we see these are the levels, all those things. Now then I'll show you intraday levels also. Hope this is clear now. So we cleared now what is open interest. We cleared now what is resistance and what is support. We clear now trades. What are the trades we can take? What is the trades highest participants are thinking? We need to understand what are the trades or maybe expected to take. All these points we understand. Now let us see intraday chart. Means intraday, not chart, intraday open interest transfer. This is open interest of 18th, yesterday's open interest. As per yesterday, what is the highest one? Here also we see highest yesterday. What has happened on Friday? 19,400 highest call sold, and here, right, straddle has been there, 19,300. Let's say, I'll tell you what has happened before that. Let's see what has happened before August. See, still 19,400 is not being left. Equal 19,300 is short straddle was there on Thursday. On Wednesday, like this. So you just keep watching this one. On 14th, see. So how it keep changing. So nobody is unwinding 19,300 this week. So highest participants are assuming that this 19,300 is not broken. Did you see last 1 week, last 3 weeks, this 19,300 was never broken and closed. Intraday broken happened. Intraday level it broke, but it was never closed 19,300 so far. Let's see. Let's understand. This entire August month we see. See, since August, this 19,300 puts were sold. They have not left it. So we see this one, this highest straddle was taken at 19,300. Some people have taken maybe hedge or whatever. So you just interpret your trade and understand like this. This is what has happened. Now let's come to the straight forward. Keep observing this open interest change, okay? On 18, just understand what has happened. This is called unwinding. What is that? 19,400 puts were unwinding happened. See, minus. Here is minus, which means unwinding happened. Why? What does it mean? What is unwinding? People would say these many puts are unwinding, this, that, we'll keep talking about, right? What does it mean? Means unwinding means market does not close above 90,400 by this expiry. I repeat, unwinding happened at 90,400. 90,400 unwinding happened, which means I write it here. Why? Actually, generally 90,400 and earlier 90,400 was sold, right? I'll show you, right? Just observe 90,400 before. See, on 17th, on date 17th, 19,400 still they're holding, thinking that market would not break. 90,400, they expected, participants expected that market would hold 90,400. Hence, they are holding 19,400. But remember, on 17th, market also closed below 19,400 only. But they assumed that, they expected that market would not close this by this expiry below 19,400. But they came to 90,000 on 18th on Friday. Their view changed. See how it is beautiful. Open interest. Now it goes to yesterday. What has happened? Everybody unwinding happened, right? They are unwinding 90,400 puts. Why? They believed that by this expiry of August, market would not close above 90,400 at all. There are no chances. Means chances to close market above 90,400 is very remote. That's why what has happened? What has happened? Just they close all the puts 90,400. Do you understand? This is the beauty of what is FS are thinking, what is winners are doing, what is market expectation most of the participants are thinking. Based on that will make trades. Do you understand? Let's say I have short at a 90,400. Let's say 90,400 put I short. Then what do you do? Based on this change, what is the adjustment maybe you can do? You can also exit this 19,400 and maybe you roll down to 19,400. This is an idea. I'm not telling you to trade like this. This is an idea you can plan. This is what has happened. So this is how maybe you can think. Accordingly, you can make adjustment to your trade. This is much more helpful for positional trade. Of course, this is intraday level I'm telling you, okay? Not for positional. Okay, so intraday level, what has happened, all those things, I'm telling what is unwinding, what is all those things. Okay, hope this is clear so far. Now, finally, I will show you what is multi-strike. Now, let's go to multi-strike. Whatever I explain, yes, I will show you our multi-strike open interest. Yeah, this is a multi-strike open interest. Let's keep it as 5 minutes one. Okay. Now, this is where is a spot. Here we can see a color and all here only. Okay. Now, see this. Observe this one. So this black color, what you see is a spot. What is spot closed here? Right? You know, right? This is a spot closed. This is spot. This black color is indicating spot closed. What has happened? What has happened here? On 18th, 9:15 a.m. Let's understand. On 18th, 9:15 by the 9:15 a.m. Right? Most of the participants expected that What are the expected? This is red color, right? Let's see what is red color. This red color is 19,300. I'll tell you a very beautiful concept here. Please pay more attention. Red color is 19,300. Let me mark it 19,300. This 9:15 to till here, maybe another 15 minutes. $19,300 went up. What does it mean? They keep shorting 19,300. They keep shorting. So it's going high. It's going high, right? 19,300 call, keep shorting. Till where? Till here. What is the time? Let me put till the time. Yeah, by end of this till end of the day. So whole day they are holding 19,400. Let me clean it up. This, if you see red color, if you see this red color, right? What is this red color? 19,300. Call, keep selling from here to here because they're expecting market would go down, break 19,300 and it would go somewhere else. But after by end of the day, what has happened? See, this unwinding happened. Fell here. Why? So assume that end of the week, end of the expiry week, so Friday, they don't want to carry too much 19,300 calls because spot closed above 19,300. We know, observe this market yesterday. Reliance has rallied so much. One point of time, market was a deep red and came to green as well. On Monday, they assume that market may take out bottom at 19,300. It would go beyond that. So if that is the expectation, what will happen? This 19,300 calls were unwinding happen. Similarly, here see, 19,300 puts are there. 19,000 puts also taken by end of the day. Those were also unwinded. What has happened? So 19,300 calls closed, 19,300 puts were closed. So maybe this part is called last 15 minutes. Let's leave it. This part is called last 15 minutes. That all happens. Let's take until here. So we don't care about last 15 minutes or half an hour trade that we know, right? Last 15 minutes or half an hour is the different way. So we consider this one only. Now, if we consider this 19,300 call, 19,300 puts, irrespective of market movement, they keep shorting. That's what you see, right? There's a short started. How much short started? 915 hours. From here is a parallel. From here, keep shorting. 300 call, 300 puts, keep shorting. Clear. They don't even unwinding happen. Last time unwinding is ignore this. But what has happened? This one. Now let's say what has happened to 19,400. Okay, I'll show you. Just observe this one. 19,400. What is the 19,400? Do you see? 19,400 still going up. This is 19,400. This is 19,400. This is called 19,400. And I'll show you. Leave it 19,400. Then 19,400. Now 19,400, 300 is over. Yeah, 19,000. We take 200. Yeah, 19,200. 350. 9300 put, 9200 put. Of course, yeah, green is the one. Keep going. Because, so this is how what has happened. So over a period of time, what has happened? Based on this, we understand that how people are strikes are being sold. You understand that. Hope this is clear now. So people will look into intraday. What is happening? What is the most? Even intraday view, it would help to be much more better. So what has happened in live? You can see that what has happened in all those things. This by these strikes. So beautifully, this sensible where we can learn, we can do. Of course, if you want any specific strikes, we can add here also. We can add. That's all about open interest. Hope this is clear now. So let me recap what we learned. What we learned. We understand what is open interest. We understand who are the participants, and we understand seller point of view, sellers versus buyers, who are the buyers, and we understand what is resistance versus support. We understand based on that how trades can be taken, how trades can be adjusted. We understand multi-strike open interest. So this is all FII data. Based on that, we interpret the market accordingly. We take the trades. That's all from my side. Open interest. If any of you have any questions, can mute out and let me know. We'll happy to answer that.
Sir, in this, which one is relevant, like the weekly open interest or monthly open interest?
So that's a good question. See, those who trade weekly is the most reliable one. Weekly is most reliable one for Nifty. The next goes to monthly. This is a monthly.
Okay.
But Bank Nifty, comparatively Nifty, Bank Nifty is not that reliable. Looking at the open interest, of course, still we can see open interest, but compared to Nifty, Bank Nifty is less. Generally, Nifty will give you more results, better one. This is about index. Then let me add this point. Thanks, the good question. So other one is stocks. You may think, can I consider same way for stocks also? Maybe you can think about that stocks. Can I say, because in index we don't know. Index is okay. Stocks is a good one, right? We know this. No, stocks maybe max 10. Max 10. Top 10 stocks only you have to consider. Only 10 stocks. All other stocks you don't. It doesn't work. Open interest doesn't work. Other stocks. Only high liquid, high volume based traded stocks you can consider for open interest. That too, maybe last 2 weeks. Last 2 weeks only you can find better way. Only last 2 weeks. Not every month starting itself you don't find it. Because you know, right, stocks and all most trades takes place in futures and cash market, not in options. Options very less volume. So futures and the spot. I mean, DS trade on spot, right? And FIS most trade on futures. I mean, it comes to stocks. Options are very less. So for stocks we cannot use open interest that as good as Nifty. Any questions? Any other point? And also, I'll tell you one more point. Open interest. Do you think? I mean, you may ask, open interest is okay? 100% does it work? 100% does it work? Open interest for me? No. If it works 100%, 100% people can make money. But why 95% lose money? Why 5% only out of 5% also draw down, only hardly 1% make money. Means 99% lose money. Why? Means there is no tool, no indicator, no strategy which will work 100%. No, there is nothing we can say 100% work. So open interest is one. Along with open interest, you have to look into charts. You have to look into charts. Plus FI data, so FI cash data, also you look into that. So if you ask me this percentage wise, let's say open interest is 40%, charts another 40%, FI data is another 20%. You have to consider this all three to predict the market and interpret. Unless you see all of them, you do not know, right? Sometimes open interest will give some view. Sometimes chart will give you some view. Charts, right? You see there are different candles. Sometimes indecision candles are there, right? You know, indecision candle is there. Suppose candles like this is there. Candle say the 50 minutes candle, 1 day candle is closed here only. What do you think after this market goes up, goes down? How do you know? We don't know. This is the candle closed like this, means indecisive candle. What do? Then you go and look into open interest. How is the open interest? Where is the highest open interest? And all we see based on that, open interest says bearish view or open interest says bullish view. Based on that, plus this candle, you can take the call much better. That's how you have to understand. Yeah. Anybody else? Any other questions, please?
Sir, you're saying it is 40% chance. That means it is easy to manipulate the data in open interest?
No. This is not a winning rate or success rate or failure rate. I'm telling that to predict the market better way, you need to keep 40% weightage to open interest. Let's say 40% to charts, means you have to combine all together. I mean to say that you have to combine all together to come to a conclusion. That's what I meant to say, that not winning and success and winning rate. 40% for charts and open interest together, you need to look into that. Even FI data also. These three, you need to combine to make a call, to predict the market, to interpret the market movement. That's how you need to think on that. Hope it's clear now?
Yes, sir. Yes, sir. Yeah, thank you.
This point is clear now, right? So open interest is not about market movement. It is about what are the major participants are thinking at this point of time. This would keep changing same day. This would keep changing next day or next moment also. It is not a guaranteed way we can say this is how market movement takes place. No. First, that is important for you to understand.
Well, stocks will be better because most of the stocks will be having illiquid. No, sir. That's why for positional, which stocks will be better?
No. See, you have to go by weightage. So Reliance, you have to go by weightage. These stocks are not illiquid stocks. You can go to Reliance.
Okay.
You can go to HDFC Bank.
Okay.
You can go to ICICI Bank. You can go to Infosys and TCS. If you see this one, right? These four, these five.
Okay.
You can think this way.
Okay. Sure.
These are high liquid stocks, definitely.
Okay.
Don't go by FMC stocks or don't go by any other stocks. First of all, OA itself hardly works for stocks, but only very few stocks, top 10 stocks by weightage. That too, only it works last 2 weeks. 2 weeks of the month. you can see majority works. So month starting itself, we cannot find it because I told you, right? I think I told you the reason why it doesn't work stocks. Most DAs work in cash market and futures, but open interest is for options, right? So we don't get a picture from the stocks. That's why open interest is not good for stocks.
So what about Bajaj Finance?
Bajaj Finance by weightage, it doesn't fall under top 10.
Okay, okay. Okay, sir. Thank you.
Yeah. So anytime, right, market rallied, market fell, we see only these stocks only, right? Top weightage only. The Reliance is rallied, HDFC Bank or Infosys, ICICI Bank, and TCS. Only the out of these 5 only will find many times 80 to 90%. We'll see these stocks only. Bajaj Finance or other stocks or ITC, very few times we find it. All other times only this one, because I explained to you all, right? Any short covering, anything happens, would jump onto the stocks and make positions adjustment accordingly. Thanks all. Thanks for joining. I'm closing that. Let me know how it is helpful to you. Maybe I will upload this video over YouTube. Please do watch and subscribe to that. We have a YouTube channel where I have several videos. We have Telegram group here. You can join where we discuss many things. And we have Twitter as well, Twitter handle where there are several things will be shared. So whichever way comfortable, you can join and watch and observe that. Learn together. Thank you very much all for joining. Bye-bye.
Thank you, sir.
Thank you. Thank you.